Big news for Meta and the broader social media complex today. Meta agreeing with California and quite a number of other state attorneys general to settle its federal case over social media child mental health harms. As part of the settlement, Meta agreed to pay as much as $16.7 billion. Now, the stock has seesawed throughout the day today. Right now, the shares are up about 1%. Let's bring in somebody who can tell us what this means for the company. Mark Mahaney, the head of internet research at Evercore ISI. I know you wrote a note about it. Share with our viewers sort of your big takeaway, Mark, about this settlement and what it means for Meta moving forward.
Okay, well, I think this has been one of the two major overhangs on Meta stock, the other one being the amount of capex they're spending with uncertain returns in AI space. But this legal issue has been a major overhang. And I think they did, by doing this deal, by reaching this agreement with 29 state AGs, I think they've mostly put this behind them. The three areas of their AG's case, there's a schools case, and then there's 1,200 school districts have come together in a case that is going to be also looked at by this same judge early next year. And then there's a series of individual lawsuits. But of the three kind of legal challenges, the biggest one by far is the state AG case. And having decided it and largely put it in a rearview mirror, I think it's a big relief for the company.
Our colleague Julia Borson has reported that the teens that would be affected by these new rules only make up about 1% of Facebook's bottom line. So is it relevant at all if teens now face new standards where they can only be on Instagram and Facebook? And honestly, I didn't know that teens were even on Instagram and Facebook anyway. But does that matter to Facebook at all?
Well, yeah, it does matter. Yes, and there's some shocks in here that, there are apparently some teenagers who on these social media sites past midnight. Who knew? But so there are some of these blockages here. You can't be on between the hours for now of 12 and 6, and then there's some blockages of when messages can be sent out intraday during school hours. A lot of these are kind of healthy, common sense steps that Meta has taken, and now probably other companies like YouTube, TikTok, and probably Snap are going to have to take as well. It's not immaterial amount of ad dollars and time spent and engagement in users that would come from this cohort, the under 18 cohort. It's probably a little bit low single-digit percent impact to potentially to revenue. So that's why the market's given us a little bit of a mixed reaction here. One is there are still other cases, the schools case and individual lawsuits that remain up in the air. It's uncertain how those are going to be resolved, but it's high. I think it's probable that those will get resolved at a much lower amount than the state AG's case. Well, and then secondly, there's this uncertain outcome in terms of the impact of that, sort of lost usage to Meta's fundamentals.
Well, yeah, $17 billion over 10 years, it could be $1.7 billion a year. That's like a day's worth of revenue for Meta. Anyway, at 17 times earnings, you feel like the stock's been kind of held back by this. You said it was an overhang. So does this free Meta to trade at a slightly higher multiple then? And if so, how high?
Yeah, no, absolutely. I think it does. There's just a lot of fear in the stock, kind of similar to the fear that was in Google stock 12 months ago. So, I think an asset like this that can probably sustain 20% compound earnings growth in the future, that's growing its top line at 25 to 30% with 30% operating margins while deep in investment mode. I think all of that argues for a multiple that could go 25 times, and I wouldn't be shocked to see something like 30 times. But a lot of things have to happen between now and then. This is the beginning of the unlock, I think, on Meta. This is one of the reasons why it's our top pick in the space.